Oh man, so in this video we're going to be talking about Near Protocol, and my price target is going to shock you. Yes, Near Protocol is a proof of stake layer 1 blockchain with sharding built into it. Yes, really exciting project. A lot of people are talking about it. If you like this video, smash the like button and subscribe. We're going to get straight into this video. As always, guys, you know this channel is all about blending technicals with fundamentals. We're going to go through a bunch of interesting fundamentals on Near Protocol, and currently you can see that Near Protocol is near all-time lows here, and as you can see, sitting here at $4.40 and very far off its highs here of $20, just like many altcoins during this bear market. But the question is going to be, how far do we think this can recover, and how exciting of a project can this be? As always, guys, if you like these breakdowns of exciting altcoins which can potentially rocket from here, smash up the like button and subscribe. Now, first thing to do is let's try to compare, and shout out to Nearweek for these graphics. We want to compare Near Protocol to the metrics of various other layer 1s and layer 0s. And the first thing you want to be looking at is, obviously, let's look at the market cap. Now, at the time of recording this, it was at the time of the person making the graphics, 7 billion. But we can see Near Protocol is currently sitting at 3.3 billion with a fully diluted of 4.4 billion. We're going to come onto that shortly. Now, if you take a look, it's got proof of stake with Nightshade. That's very important. In essence, what Nightshade is it gives sharding into it. So potentially this has infinite scalability, right? This is the new generation of layer 1 solutions, and this is supposed to have ETH 2.0 and Polygon and much more all built into one, right? So if you look at it in terms of the sharded, you got a tick. Ethereum obviously doesn't. Solana doesn't. Avalanche doesn't. Cosmos doesn't. And Polkadot doesn't, as Polkadot does, sorry, and Cosmos do have the sharding. If you then look at the block time is 1 second versus 1 minute versus 13 minutes on Ethereum, less than a minute on Solana, and multiple minutes on Cosmos and Polkadot. The time to finality is interesting, less than 10 seconds, not quite as fast as something like Algorand, which is interesting, but still very, very fast compared to the likes of Ethereum, and quicker than Solana and Polkadot. If you look at the transactions per second, they're claiming 100,000 transactions per second, which is very, very interesting. And I definitely want to see this being used. We know that Phantom, for example, has very good throughput. We know that Solana has very good throughput at 50,000. Can Near Protocol actually go and deliver on that 100,000? But from a textbook point of view, this is very, very good figure here. And then, of course, the transaction cost less than 0.01. Again, very low, but I'd argue some of these metrics could be bettered by a project such as Phantom or Algorand on a case-by-case basis as well. Fully EVM compatible and a bridge, which we'll come on to very shortly. Okay, so it looks pretty good. Then when we move on, we want to look at the number of validators. And if you look at the number of validators, they've only got 100 validators to Solana's more than 1,000. Avalanche has more than 1,000. Cosmos has just under 300, I believe. Polkadot, more than 1,000. So they've got a lot of work to do in the decentralized space. And this is one of the criticisms of Near Protocol, and something that we have to be cognizant of when looking to invest. This is one of the areas they could make some progress on, is the decentralization. If you look at their ecosystem incentive projects, they're very well funded. And this is one of the benefits of being invested in Near Protocol. They have huge backing by amazing funds from Andreessen Horowitz to FTX Global, from Tiger Global, from so many amazing funds invested. Coinbase Ventures are investing and backing Near Protocol, which is fueling their rapid growth. And this incentive program is really important, because at the end of the day, and obviously it's funny that we have Terra in some of these old images here, but at the end of the day, why is this important? All these layer 1 solutions, particularly the new ones, are boasting very good technology, right? You can stack up Algorand to the likes of Near Protocol. But if you've not watched my video on my frustrations with Algorand, well, go watch that as well. I'll link that up here. But one of the frustrations with Algorand is, how do you go and attract some of these good use cases? How do you do biz dev? How do you get good dApp developers to come and build an Algorand when they're looking at Polygon, they're looking at Near Protocol, they're looking at Polkadot, they're looking at Phantom, they're looking at Solana and Cardano? You have to attract them with deep pockets right now, and you can see Near Protocol certainly have that. This is very interesting, and this reflects pretty much what I was saying just there. This is the developer growth comparisons between different ecosystems, and this one here, the Y equals X here, is Bitcoin. Okay, so you can see how that is growing, and you can see 2x that. You've got Cardano sitting on this line, Binance sitting here, Kusama, Polygon's about here on the graph, Near Protocol is here, more at the 4x gradient, which is very, very important. So what you're looking at here is the total developers December 2021 versus December 2020. So on the right-hand side, lost developers, more skewed you are to the left-hand side, you're gaining developers. And the standout performer here being Solana, which we also know is very strongly VC-backed, Alameda Research, FTX, Sam Bankman-Fried, right? And they're able to go and attract really good talent. So that bodes well for Near Protocol. Moving on, we can then look at the layer 1 staking yield, right? If you go and stake natively on Near Protocol, you can claim 11.6%, which, as they've conveniently showed on this diagram, looks very good against the 6% of Solana, 8% on Binance Smart Chain, Avalanche offering 9.2%, Cosmos Polkadot offering 14%, and we know Phantom offers around 15%. So decent, it's competitive up there in terms of its layer 1 native yield. This is where things get interesting because they have a major technology breakthrough with something called Aurora, which gives them the Polygon layer 2-esque feature built in within Near Protocol. Okay, so this boasts 1 second transaction feeds on EVM compatibility, right? So interacting with Ethereum based blockchain, it can use the base currency of Ethereum, less than 1 cent, 0.01, sorry, in transaction costs. So very competitive against all of its competitors, including Moonbeam, Avalanche, and Polygon. And then finally, looking at the block time and finality, right? So if you're looking at the block time, you can see Near Protocol sits at about second, a little bit slower than Solana, which is at 0.6, super rapid Solana, but we know that comes with its own problems, right? In terms of security and downtime, which is what we've seen on Solana. But the powerful thing is you need both. There's no good having really fast block time without equally good finality. And you can see Solana's finality still lacks at 60 seconds, whereas Near Protocol has fast enough block time at a second, right? Just probably a little bit slower than Solana, but the finality is really good at less than 10 seconds. But I'd argue still not quite as good as something like Algorand, which is really rapid. So very competitive space here in the layer 1 blockchain, and you can see that certain layer 1s are better than others. But the key is solving this blockchain trilemma, right? Decentralization, security, and scalability. That is what you need to solve within your layer 1 solutions. And Near Protocol is making a very strong effort at that. And when you look at that, it's no reason, you can see why, it's no surprise why Near Protocol did run up to $20 here. And if we take a look at its peak, if we take a look at the market cap at its peak here on Near Protocol, you're looking at close to an $8 billion market cap here on Near Protocol. So, sorry, I'm at the wrong piece here. It was much higher than that. It was here. $12 billion here on Near Protocol at its peak market cap, which is very, very good size there at 12 billion for what Near Protocol is. Now, a few things you want to look at is this project is expensive, right? If you look at Near Protocol and you look at it as a multiple of its TVL, I've expressed this concern before, and I'll link that video up here for you to get a detailed explanation, but it is weighing in quite expensive. You've got to remember, this is a very saturated marketplace, and Near Protocol is almost considered as that gold standard. You've got all the big venture funds behind it who have obviously jumped in very, very early. They'll have different incentives of selling when they want to sell. You can see 25% is not too bad, but still left to push into circulating supply with a cap of 1 billion. Fully diluted market cap is sitting at 4.4 billion. To put that into perspective, you're looking at Phantom is sitting currently at about 800 million, right? So you're looking at a comfortable 5x currently of the market cap of Phantom without the same TVL to show for it. So that's one of the concerns. But coming onto the charts, do we think this can comfortably be a good risk to reward investment? And when I look at it and we take our Fibonacci's from swing low to swing high, I'll need to adjust this slightly. To swing high there, and we just switch over to the weekly chart to make it a little bit easier to read. What we then notice is when you play this out, you see that it's comfortable for you to get to your Fibonacci 0.618 to 0.65 level. A comfortable retracement, even without getting back to all-time highs, suggests a 13 to 14.4 Near Protocol tokens. That's a comfortable more than 3.5x here on Near Protocol just to get back into this Fibonacci retracement level. Looking at just returning back to all-time highs, of course, gets you back to the $20, which is a comfortable about 4.5x from here. And then if you look at the Fibonacci retracements, which is really saying, why can't Near Protocol really go on and push on from strength to strength? The wider market grows. There is no reason why Near Protocol, just conservatively here, couldn't get to $31, which is a comfortable 6 to 7x here as a return on Near Protocol. So overall, Really good layer 1 solution, amazing technology, a lot of hype behind it, a lot of attention behind it, and you can see that is getting priced into the value of Near Protocol. Yes, we're close to lows here, obviously, during this bear market. I think it's a good layer 1 solution to dollar cost average into, but it's not something I'm going to be aping into. I will be methodical, I will be taking my time. I want to see them make more use cases and have some real standout use cases that the market hears about and gets the attention of the average crypto investor. I think that will be really useful to see. I always also want to see them really push through and see progress, right? I want to see TVL climb. I want to see them tested. I want to see them get out of this bear market, and then things could get excited. Like I said, there's still other good layer 1 solutions out there, which I'm weighing this up. And every time I want to allocate $1 to Near Protocol, you have to ask yourself, is that $1 better allocated to something like Phantom or Algorand or one of the other projects which are up and coming in the layer 1 space? Hope you guys enjoyed this video as always. Don't forget to smash the like button and subscribe. If you appreciate this type of content, then let me know in the comments. Do check out OKX if you want to buy any of these cryptos, and I'll see you in the next one.